Hey now, it's your boy Doc. We are here live trading quantitative calculations. We're going to be using gamma exposure. We're going to be using the quant charts. And we're going to be looking specifically as a great example, NVIDIA, right? Welcome, guys. Thanks so much for joining us live in the public voice channel of quanttradingapp.com. It is a system of tools using the quantitative method. And we've added Gex to it, and Bryant, the creators, adding a SPX trade engine. It's a lot of exciting things going on. You can join us at quanttradingapp.com. If you're thinking of joining, use the code DNOW30. Gives you 30% off your first month. And you can find me in chat. Just click on here, my name, and you will get a message window that pops up eventually, and you can just reach out to me there. Bryant does not do any DMs for security reasons. Just be forewarned about that. And a great public area here. We have a couple people live with us here that's going to be watching us go through this. If there is any technical issues, I'm going to have to cut one of the things. I'm recording and I'm live streaming at the same time, so this is going to be it's going to be a little taxing on my my 2-year-old laptop, which is ancient. So let's get to it. What are we looking at here? NVIDIA, right? They're a well-known company. I think they make, what do they make? Tires, right? They're a good tire company. No, NVIDIA. It's like a powerhouse, right? It's leading the market right now, and everyone is waiting for their earnings that's going to come out next week on the 28th. You know, when people think of earnings, they think, oh, I think Nike, they're really selling a lot of shoes. I think their earnings are going to be great this quarter. I'm going to invest in Nike because I think they're going to have good earnings. The problem with that is that the earnings do not reflect how the market does, how the market reacts to it. So you can have great earnings and have a poor market reaction, right? And I was just talking about this morning with someone. The market tends to use earnings to invest the way it wants to invest under the cover of a catalyst event or catalytic event like earnings. Meaning not the past 3 or 4 earnings, but the previous earnings for NVIDIA. You can look it up. I mean, there was reports like, oh, these are the best earnings that best quarter NVIDIA's ever seen, and it tanks. And it happened time and time again. So do not think that NVIDIA is doing just a kick-ass job that we're going to have a kick-ass market reaction, right? The market it's feeling a little bit stretched in I guess depending who you ask, right? I'm always looking for that correction. I'm always looking for that pullback, right? To go higher. I'm not saying NVIDIA is tanking. I'm saying there might just be a pullback coming in. And it's not really indicative because we've had such a long run like this that we should have a pullback. It just means that you might be a little more receptive to the idea of one, right? And I think the last workshop we had, we discussed NVIDIA at an inflection point. And I don't think I posted that on YouTube. I'll cut that up. I'll get it edited. And we'll get that up there. But as we came up, we reached this resistance, right? And we tried to plot levels that it could come back to. And I think we said 130 was the target, right? We came back, we found support, and we reached 130 overnight. And I think I even said overnight could be a possibility here. But instead, it was the next day. Anyway, once we hit here, we just ricocheted down. We got rejected hard. And this is, you can see this, it's a double top, right? We have a one touch. This is like overnight in the morning. So it's one touch here and another touch here. It's a double top. If you know how to play levels, when I talk levels, I'm talking like technical analysis levels that we draw. I put this line here and I'm moving it where I believe it should go. I'm using my experience, my instinct, my bias, all my human flaws and my human benefits are being inputted into these levels. What quant charts do, quantitative method, is give us math, right? And I say they're cold, they're hard, they're rigid, and they're undebatable. We can have a chart. I can give this chart with no lines on it to someone, and they can draw much different levels. They can probably find a level that's comfortable here for them. And that's actually where I think NVIDIA will probably be stopping today. 122.85. Let's get we're going to get the real number here. 122.77. Remember this number because as we're going to get into using the quant chart, we're going to come back and revisit these numbers. So let's make it 123 with a secondary one at 120. So 120 and 122, 123, remember those numbers. But how we play levels using technical analysis is not so dissimilar. Well, it's not different than when you're looking at a quant chart. And I pull up this day when I'm going with sessions, small sessions and one-on-one sessions on the 10th of July, just because it's just an easy one to say. We have the SPY, right? And we have the quant chart here. And let's just break down what we're looking at. This is the 2 sigma levels. This is 2 standard deviations from the mean, which means about 90%, just over 90% of the action should happen within these levels. When we get outside of these levels, we kind of trying to get the idea that, it's kind of rare that we have action outside these levels. Maybe we should start thinking about gravitating towards the mean again. And this is the midpoint right here, this dashed line. This is the sell zone. This is the buy zone. These are weekly static levels, right? You can get these every week, 5 o'clock on Sunday. You come to the, let's see, the Thinkorswim, the weekly intraday scripts. You go there and you can copy the scripts and place them on your own charts for Thinkorswim or TradingView. It's available Sunday at 5 o'clock. And then there's the intraday levels that come out at 8:30 in the morning. And those are these levels right here. These gray solid bars are the intraday levels. These are levels that will give us a range for the day, right? These aren't impassable levels. But what they do is we play them just like these levels, right? If we hold this as a rejection, we tend to look downwards. If we break, we look for a retest to go higher, right? And if you go to any of my sessions, and Brian's too, this is what really drilled it into me. Break and retest for higher, or break, let's just leave it like that. Break and retest for higher is one of like the first essential patterns, if you will, that you learn. And when I was introduced, when I first was introduced to QTA with Bryant, he kind of stressed that for me, and now that's pretty much all I see. So if you're working with levels, being on the technical analysis side or the quant chart side, we are looking for how the price action plays at that level. We have a rejection or we have a break and retest. We have a break, retest, another break, retest here, and then finally higher. So now that we've broken this level, we may be looking for a retest, right? A retest for higher. But what happens if that retest fails? What happens if we break the level and we go back to try and find some support and it fails, right? We come back to retest it, it fails, and that's usually not a good sign. It's not like I'll fail, oh, okay, I'll try again. It fails to the next level down. And look what happened. As the momentum was so strong here, we cut right through the 2-day view app. This is the long, thick gray line here, and the intraday level. But look what happened to the intraday level. When we broke it, we came back and retested it for further down. So this one gave us confirmation of continuation. This one failed. So we're looking for how it plays around the levels. What's up, Newen? Weekly levels I am able to load on chart, but it is not showing zones, just the lines. Okay, we can examine that. If it's something that technical, we can raise it up in support, or if it's just something that we're not loading correctly, or maybe we'll have to look at that, right? We'll look at that maybe after. Hit me up. So what we're looking at here is how these levels affect the price action, right? Does this level affect the price action? No, because it went up, it broke, and it didn't hold. So it's not a strong enough support. So if we were to revisit this, I would have questions of it being any type of serious support. But I bring this to your attention here because we want to look for a double touch, what we just saw here on NVIDIA, a double touch for lower. And if you look at NVIDIA for yesterday, we have this one touch, a second touch, and that would have been, okay, you know what, 2 touch, I'm looking for these double touch, I should expect downward. But we held at the 2-day view app. We caught, it was just like the safety net to catch us. So now we're going to try again. You can argue this would be a 4th touch. So let's see what happens when we touch that sell zone. Again, we break it, and when we go back for a retest, it fails. right? One touch, two touch, three touch. We opened above it. The support failed. We went down to the next level. That level failed. Right down to the midpoint. Bounced off of that. So this looks like, oh, okay, we're going to hold. Nope, we broke that, and now we're retesting on the bottom side of that. So if we're looking at this chart, it's easy to see. You're like, oh, okay, that makes perfect sense. I understand that now. If we get to this level and we break it, we're just going to go to the next level. Great. No problem. Thank you very much for this session. I have everything I need to know. I'll just look at this on my chart. The thing with quant charts and the quantitative calculations that you see here, this is proprietary to QTA. And Bryant refers to this as using the X-ray specs, right? And this is the hidden levels. So what we're seeing here is math levels. There's 124.50, right? And there's 127.28. If we were on our tech chart, there isn't really... Oh, I'm sorry. Let me turn that back on. There isn't really anything that should tell us that we would stop here at 124.50 or 124... What was it? Let's get the exact number here. 124.58. If I put a line at 124.58 or just even close to it. Oh, we're glitching hard. We're glitching hard. But you can make the case that, okay, we're over here, we found resistance, but this one just erased that. So this one shouldn't really play in because now this rules. The point is that you can take a look at the quant chart, see levels without having to plot them on your technical chart, right? Obviously, you can transfer what we just talked about. You can transfer the scripts and plot them onto your chart. But the idea is you don't have to come around here and I love technical analysis. Don't get me wrong. But the idea is that sometimes technical analysis is missed by the math that underlies. So if we are just looking at, the past 3 days for levels, which is good. I mean, some people just look at overnight. Some people look at the day before. We're looking at the past 3 days. There's not much here to tell us that this would be a nice support. I would even make the case bring it down here, which we did. We did touch right there. Perfect. So this is a good example of how the hidden levels can benefit us. And why is that important? It's like, I know my technical analysis. I've been using it for years. Why do I need more data? Because more data gives us a better vision of what it is that we're looking at, right? It's another lens. So this would be using our naked eye. We're looking at the price action, and then our experience in investing in day trading and swing trading, finding levels. There's that level. Then you overlay the math onto it, and you have another set of data. When these data points overlap, we have confluence. And that's a strong data point. Anytime we have two things telling us the same information, it solidifies each other. They now become one foundation for a trade theory. So you see here, I have marked off lines. This one we're going to go at 122. 122 on the quant chart is just above the sell zone. So now I'm going to go back to my 122 and say, you know what? Maybe I need to adjust this. Is there another area that makes more sense? And I'm right here. I can see it. The 120 area makes more sense, right? Because we came up, we touched it, we held here, we come back, and we touched it again. This is now telling us a super good support around 120. And then on the chart, we can then confirm 120 is max pain, and the buy zone is right below it. So this, even though they're, 19 cents apart, to me, this is a level. This now becomes a zone, if you want to call it a zone, of support. And it's also a target. If you look at max pain more than support and resistance, which I like to do, I like to look at max pain as a support and resistance for price action rather than a target for the week. Everyone thinks, it's the market makers. They want max pain. They want everyone to lose their money, and that's why we're going to end up at max pain every Friday or every expiration. You can make the case that happens, but it doesn't happen all the time. It's not clockwork. This isn't something that you can set your clocks by. But the idea of max pain being important as a area for support and resistance works in my brain because it's the flip. It's what it is really the point where the calls and puts have the least intrinsic value, but it's the middle between those two. So right now, having max pain along this buy zone is super confluence to me. And if we look at some technical analysis, maybe we can get some more in there. Right here. 119.50 right up to 120.50 or so. So now what we have is a strong support level. This we've proven. Write this down in our journal. Check. The next thing we can do is we can open up our GEX. And I'm going to load the advanced GEX here. And as that loads, we're going to go over to the gamma exposure channels that are in. This is on the gold side. You have, for the equities, is Tesla, Apple, Amazon, Microsoft, NVIDIA, Meta, and Google, right? The Magnificent Seven. I cringe every time I hear that, but it is what it is. Also, we have the ETFs and the markets. You know, we have the SPY, SPX, the Qs, the Russells, 0DTs, and weeklies. We'll get into that, but first we want to focus on NVIDIA. What GEX will give us, it can give us levels, right? It can tell us where the price would probably most likely stop, because it's going to show us that there might not be interest past a certain level. So remember from our last session, 130 for NVIDIA was the big number, right? That was the big attraction. It still is. It's got this highest GEX, and it has the call volume spike behind it. Now, if you're following along, call volume spikes are support and resistance first and foremost in my trading strategies. You can also consider them as an attractant, right? The idea that they're on they occupy the same strike is interesting because then we have confluence. So if we circle back, and you could do this too on the GEX feed. Now, while the GEX feed is every 15 minutes, with NVIDIA and Tesla, it's every 16 minutes. It takes a snapshot of the current GEX temperature, the GEX state, whether it's negative, whether it's positive, where the strikes have the most or the highest GEX, where the most liquidity is. The good thing about this, or great thing I should say, is that it's a tape, it's a tail. And you can circle back. Like we were just talking about, well, I think our last session we talked about 130 being good. And what was that, the 20th? We can just scroll up to the 20th and see where it was. And sure enough, 130 was a major attraction zone. We have this huge high GEX bar and the call volume spike between it. The spot price was below 130, and we were talking about, I think NVIDIA wants to revisit 130 again. Now remember, we shouldn't be looking at these as like absolutes. These aren't trade signals that say, okay, let's take out a second mortgage of the house. We're going to go to 130, and we're all going to get green Lamborghinis by next Friday. This should pique your attention, pique your interest, just to give you a clue of something, and then you overlay that with other data, similarly to what we just did with the other two data points. But what GEX can tell us, more so than just support and resistance, is where an attraction lies. So that 130 attraction was huge, and if you remember, on that day, 130, there was no negative GEX, right? The negative GEX is below the zero barrier, and the positive GEX is above. There was no negative GEX. I mean, there was some, but it was insignificant. Now, we're starting to have some more. And let's see when this negative GEX really started. Let's circle back to the beginning of the day. Again, this is because it's a tape. We can go back. And actually, let's see what yesterday looked like in the afternoon. 216 yesterday. Absolute GEX. An area of the high liquidity is absolute GEX. High GEX, this green bar. Positive GEX, area of high liquidity. 2 areas of high liquidity. 2 data points of high liquidity. High at 130 again. We're going to follow this absolute GEX. Where this goes, it follows where the highest absolute GEX value is, which is an area of high liquidity. And what I do is I watch for a shift throughout the day, because this is a value. Just as you see this call volume behind you, it has different values at different strike points. Absolute GEX looks similar like that. We'll look at that at the advanced GEX table in a minute. But what it does is this lets us know where the highest point is, and that's really the most important information that you need in a snapshot situation. If you want to drill down into the data, which I do, we're going to look at that advanced GEX. But I look for a shift. Right, I'll find that, okay, if we have this high GEX, if it starts at, I'll watch this. So it's like we reach this 130, okay, that's a waypoint. That's reached in our journey. Now, where do we go? Do we go higher? Does this make sense? This is like an open field. This is like a no man's land. Imagine trying to get out of a trench and you have to run to this other trench for cover. That's not the best analogy I've ever used, but we'll go with it for now, right? This is a long journey for that person to find cover. This is also acting as a resistance, this call volume spike. Again, it's not impassable, but it acts as a hesitation point to make investors, or it should make investors go, is this just going to go straight continuing, or are we going to have a problem here? Are we going to have an issue? Right? So what happens is you start thinking like that, or at least I start thinking like that, and I might be a little crazy, that's understood. But now we kind of think, okay, maybe we don't go here because this is a big drop-off. And they call that, people say that in the community, there's a drop-off, a GEX drop-off, which means it's unlikely that the price action will go higher unless the situation changes. So now our next inclination, or our next area that we're going to be looking for is, are we going to go back down? Okay, so on our technical analysis, it makes sense, all right? We have this double touch here. That could possibly be a pattern to go down. We have some support here, right? So down, okay, down looks okay. Down looks great. Does that theory hold up? Well, there's not a lot of negative GEX. There's not a lot of attraction here drawing us down. But as we go through, and then we'll just skip ahead to the next day, which is today. Let's look at, let's say 11. 11 o'clock, still similar to the day prior. And you can see the price action, the spot price, that's the price, the current price, starts to come down. And as it starts to come down, we'll watch these bars, and all of a sudden, we start getting more attention. There's more sentiment, right? This information all comes from the options table, right? When people place calls, when people place puts, when they have contracts that are out, the books are open. The market makers take on contracts that people want to open, and then they go find other traders, investors, to get the other side of that contract, to get it off their books. In the meantime, we get to have that insight of where people are looking. So if people are looking, now there's a lot of action now starting to really pick up now towards the afternoon. Now, NVIDIA made its big move early in the morning, and a lot of people will say, oh, we made the big move, that's it for the day. But as we're looking at the GEX, there's more action that people are now looking down to 120, below this max pain on here. This is a different calculation on the GEX chart for max pain than it is on the other one. I've never really explained it perfectly, so I'm not going to do it today, but I use that as a support and resistance as well as the weekly max pain, as opposed to this daily max pain. How it's calculated, I don't even get into that. That's not my, it's not even, I don't need to, right? I just need to know how to trade it. So just wanted to head that off before there's any questions on how that's calculated. That's not my department. That's above my pay grade, and I'm fine with not knowing it. But what we're going to look at is, now that there's a traction for lower, 120 seems to be of interest here, right? 120, and this max pain of 122. 120 sounds familiar, doesn't it? Where did we see 120? Well, we saw it all over the place. We saw the 120 on our updated support that we just drew between this second touch and this resistance, nice sandwiched in there. And we also saw it on our quant chart. Here it is, 120, max pain, 119.50, buy zone. Now we have 120 as an attraction. We have a support. We have multiple supports. We have a technical support. We have a quantitative support. And we have max pain support. And now we can add to this case, we have a 120 attraction that's growing, right? And in this case, I wouldn't be so impressed with, it's not as a high bar as that we saw 2 days ago on this side. It's significantly higher than the rest of it. But what is really piquing my interest is when we look at this feed, we can see that it's growing fast, right? We can see that the significance of this is gaining in value, and the higher GEX is losing. The more the attention is growing to the 120. This is what I look for throughout the day, as I'm an intraday trader, and I had to stutter there for a second because I'm trying to get away from that. I'm working on different projects at one time, so I'm trying to get into more swing trading. But when I'm looking for an intraday move, that's the one I would be looking for. If this had happened earlier in the morning, it'd be something I'd be all over. The fact that it's happening later in the afternoon, this is something that's going to pique my interest for a play into tomorrow. Right? So intraday trading in the latter half of the day is a little more wild, wild west than it is in the morning. Right? But here we can see here, we touched this support, and as we came back, we broke it, came back, and retested it. If we look at it on the minute, we can see here, perfect, right? Break, retest. If this holds, this retest, we should see more down. This holds true on the quant chart. There is nothing. There is no levels here. We surpassed. We're below the intraday. We're below the VWAPs. We're below everything. And the 2-day VWAP is not going to help us for tomorrow, because the 2-day VWAP uses the current day and the previous day's sessions to plot its line. So if this VWAP is here today, even if tomorrow's VWAP is right at the price action, it's still going to be, it most likely will be above us, right? Anything can happen, so I'm not going to say it will be, but it should be most likely above us. This is what piques my interest for a quick overnight lotto. I don't like to say overnight trade, because we're looking at this with an hour and a half left in the market, and I spent 5 minutes on it, and it's kind of hard to discern what would happen overnight. But things are looking to me that a move to 120 could be worth a bit of a risk. You know what I mean? A little bit more of it's not a perfectly calculated risk, but it's a calculated risk. A lotto to me is something that is money that I'm okay with not seeing again. It's you buying a ticket. If you win, you win. If you don't, it's okay. Tomorrow is Friday, so whatever we get, any options we get for tomorrow's expiration, if it hits, it's going to be a winner. If it loses, it's going to be a loser. This is why it's a good lotto situation. And then you can just go through your options chain and look at it. Now, Newen, again, thank you for coming today. Newen was asking really nice, specific secondary Greek questions regarding Vega and implied volatility. These are data points that we look at when we're plotting a more complex strategy, something of a spread, something around a catalyst, right? And as we mentioned in the beginning of this broadcast, there is a major catalyst coming up for NVIDIA. Huge event. It's a very special day, August 28th. It's my birthday. Don't dox me. But the idea is that on this day, NVIDIA is going to have earnings. It's going to be good earnings, or it's going to be bad earnings, or it could be flat. Who knows? They could just easily get exactly what the estimates were, and there should be no reaction, right? But what do we talk about with earnings? The reports do not dictate the reaction of the market. So if the market is feeling a little overextended, or just a little too much, they could use this catalyst event to trade the way they want to trade. I mean, that's a really basic, and it's kind of reckless for me to say it like that, but that's really the way to understand it, because the market will react how it wants to react, regardless of whether NVIDIA sold 1 million chips or 2. It'll be harder to explain, like, okay, why did NVIDIA just crush earnings and we got tanked? But they never look into it that way. The idea is that we should be available and be ready for both. You can make a case that I have a strong feeling that we could go lean one way rather than the other, and that's when you take action on an earnings. When you have an indication that the market reaction would be easier to go one way rather than another, you can then play it with, I wouldn't even do a set spread. I would just do 2 different trades. And this is where you start looking for implied volatility in Vega. Now, from what I remember, it's if the implied volatility, if you expect it to go down, you get on the sell side and you capture that IV crush. And if you expect the volatility to go up, you buy into it. So if you wanted to play a straddle on this, you want to play both directions, you could get a sell call, like a vertical spread, but make sure you're on the call side, get the sell side of it and capture the IV crush. Because right now, let's see what it's at. It's probably close to 100. 70s. All right, it's in the 70s. I thought it would be a little higher than that, to be honest with you. But NVIDIA, I mean, I think it's always on the higher side lately, right? Either way, this should dip down. It should probably get more, actually, as we get closer to next week. This is also the thing. It's next Wednesday, right? So we have more time for this IV to get higher. There are ways you can do a calendar spread. You can get a sell call for that Friday. And even if, the market goes one way, you capture that IV. The buyer will then be out because IV crush. He got on the buy side in a high IV situation. The IV is more likely to go down, and it loses the contract value. It's a little more complex to get into in this workshop, and that's what I really have private sessions for. But we could probably work on something like a class or something like that. I don't want to get ahead of ourselves in this workshop, though. But the idea we're going to do today is try to trade using the information we just had and possibly find a trade for overnight or into next week. The one that I've really come to understand and really back, that I just said it out loud, is that play down to 120. Again, this is a lotto. This is not trade advice. This is not financial advice. Everything we talk about should be paper trading. But this is what I would do if I was looking for a lotto into tomorrow. And reasoning why is that we have strong support at 120, right? We have the attraction that we found on the GEX to 120. Now, what I would do is I would get a one step more detailed. And we go here to Advanced GEX, and we type in our ticker. Now, if you have other tickers you're following that aren't large caps or mid caps or maybe on the small side, as long as they have an options chain, there'll be values here. The only caveat is that if they're not a heavily traded options market, you won't have enough data to really make a really good valued estimate. So what this is showing is every expiration that's available on the options chain. It excluded this one for whatever calculated reasons. I'm not even going to get into why. It's not such big of an idea, a value for me on why it's excluded. We could tap it to get back in, but we're going to focus on this particular trade. So what this is, every expiration is now highlighted. It's taking all those expirations, all the sentiment, the people that have bought calls, sold puts, any type of action, and process them into this graph. 130 is still the highest. It still reigns as the highest out of everything here. But 150 is gaining in value. Now remember, this is all the way out into 2026. We're not talking locally, because locally we're talking about a push down to 120. If it holds here, you can make the case that this was NVIDIA's retest for higher. Or no, actually the retest is at 117. Hang on a second. Nope. No, that works out perfect right here. This is the thing that I wanted to retest. Because if you zoom out a little, you can see this cup action, right? It's not the prettiest cup, right? You wouldn't see this in Home Goods or TJ Maxx or anything. It's not a pretty cup you can use, but it's a cup formation, right? We reach, we have a resistance, we come down, we find support, we come back up, and in the middle, there's usually a spike, right? We come down, we spike, but we continue the cup formation. When you get that handle, when you're looking for that handle pattern to finish the cup and handle, it usually revisits that spike. I sometimes refer to it as the widow's peak. I swore to myself I would not refer to it anymore, but I just did. So here we are. But it usually finds support there. This is not printed. It's not, tradable, but it's just something that I've noticed. So this is why that works out perfect. And I think that's probably why I had that line up there. Remember, it was at 122 when we started this session, but now this makes a little more sense locally. So this is something to keep in mind. 122 is the top of that widow's peak. Spike in the middle of a cup, and 120. So this would be interesting. Now, if we're thinking to play that 120, we may have an obstacle at 122. This makes me go back to the drawing board and think maybe 122 would be where we stop, right? This is all something you have to calculate and plan in your own head based on your level of pain tolerance, your account size, and everything like that. But these are things that you want to play around with in your head as you develop your trade. Now, if we're talking just 4 points or 2 points away, it may not be such an incredible opportunity, right? It looks pretty good here, a 4-point move. But now if they have that freeze at 122, and it does make sense right here, 122.72. So this may be something that I would lay off of, right? Again, what your risk tolerance is what your risk tolerance is. My level of confidence on a trade has gotten higher ever since using QTA. I used to be a lot more riskier, right? I used to be much more reckless. I was like, oh, you know what? We bounced off here. We're going to go down. Let me just get a put to 120. All right, what's next on that, the agenda? Now that I have access to more data, we can then fill in more profit targets, more supports, more resistance, more levels. And the more levels we have, the more information we have, the better we'll have. Because I like to say, what was the saying? Anticipate, never improvise. So if I'm looking at every possible trade outcome, I'm not going to be surprised. And I always get weary. I tune in and I watch people trade live, and I see some people get very excited when a trade comes to into their favor, like really excited. And it kind of throws me. I'm like, well, that's like getting excited when, your boss used to hand you a paycheck on Friday. Here you go. Thanks for all your work. You jump up and down. You're excited maybe the first time. But, after every Friday, you come to expect it. You get that paycheck. You say, thank you very much. And you walk out that door and you have a great weekend. So when you get a win, you should be like, great. I expected that. I put the work in. I put the time in. I went to my quant charts. I went to use the GEX charts. This is what I expected to happen, and this is my reward. Give it to me, right? And using quant methods and GEX methods, you gain more confidence, right? It makes traders more confident, period. It makes me more confident. I know that for a fact, right? The idea is that's what we're looking for, because we're not in this to gamble. We're not. I love going to casinos, don't get me wrong. I live in New York City. I'm 3 hours away from Atlantic City. When I go, I take a certain amount of money, and I end up going about 2 times or 3 times about that certain amount of money. But I like to gamble because I understand, but I'm going into it understanding the risk. When we're investing, we're not in this to make money by gambling and guessing. We're in this first and foremost to save our money, to protect it. Protect your cap. That's what I say all the time. Protect your cap. If you lose your capital, you will have less leverage to gain more. And we're not into this. We should get out of the whole like poker chips, like playing Texas Hold'em. I have the biggest stack. I have the biggest weight to move around. We have to make calculated, cool, and confident plays. If you're into lottos like I am, there is a time and place for it, like right now. Because right now the options for tomorrow are fairly cheap. 56 cents would be that 120 call. So for just over $100, we can get 2 plays to go down there. If we hit, okay, we'll go up to $2. Or maybe tomorrow it'll probably be like $1.75, $1.50. But this is the calculations that you take, and this is the data that you weigh against your own pain tolerance, trade preferences, goals, things like that. Can I analyze SPX? Absolutely. One of my favorite things. No, not really. SPX is something I used to partake in a lot. I don't anymore. I should probably revisit it because SPX and QTA go together like bread and butter. SPX is an amazing tool. What it is basically it's a derivative of the SPY, right? The SPY, let's see, let's get it here. Good thing about SPX is you can trade using the SPY and all of its data points and use the SPX. So we can look at SPY and we can find levels on SPY, and then we can look at the SPX and see if those levels. So some people do is they look at the SPY for the action, but they'll trade the action on the SPX because it's cash settled, because it's more wider, right? We're looking in the thousands rather than the hundreds. You can kind of see the moves a little better. What we're going to do is first we're going to start off with the SPX 0DT. Even though we're like about an hour from close, it should still give us some good data. See, as you get further in the day, it just gets, well, this is interesting. Usually it's a little, this is good. What we're looking at for attraction points, right? Right here is our spot price, right? We are below any type of call volume spike. We're now in the put spike area. We're in negative territory. Now here you can notice that these colors, the negative colors, are red. Before on NVIDIA, they were like marine blue. When these bars are red, that means the environment is net negative. That means the net GEX is negative when these are red. And what does that mean? All that means is it's more volatility. And as an intraday trader, swing trader, we like volatility. We want to see those moves. You want to see those swings. For the long-term investor, that's the one we want to see lower volatility. At least for me, I want to have a nice slow gain, a predictable route. With this volatility, we're kind of all over the place. So I can see here, we're at this 55.80, and the next one down is 55.70. This is the point of interest here. These are two bars together. If this had been one long one, that would have been an attractant, but two bars together is still an attractant area in my book. And right above this, we have this put spike. This is the highest put spike that there is, 55.70. If we start teasing to go past here, 55.70 could be a target. We'll go look on the technical chart to see if there's anything here, but this little gap is our only obstacle from what I see on this chart right here. Beyond that, we have more of a gap. That's more of an obstacle. Down to 550, 55.50, right. Another good thing about using or having to trade on the SPX, the SPY, is that we have the 0DTs and we have the weeklies. So we can overlap another set of data. So then we just looked at the 0DT. It's an hour left in closing. If you guys are into pegging the close or finding that, pinpointing the close, you can use that. The SPX weekly will give us the Friday's expiration that we can then overlay onto what we've seen here. I know we say 55.70, 55.50. 55.50 still has that put spike, the closest put spike, and then 5500 is the max pain and the highest put spike. If we were on advanced GEX, we could toggle all different types of data and find out which way you think we're going to be going. I don't like to comment so much on SPX because it left a really bad taste in my mouth from the person I was working with. So I don't even like to speculate where, but I'm going to. I don't like doing this, but I'm in the middle of doing it anyway. So technical, we can see 55.50 makes a lot of sense, right? I'm just going to steal this line here. 55.50 makes a lot of sense. We came up, resistance, we broke it, support, almost seconds, and then we're coming back up, and we're going to revisit it. So we have the attraction from the GEX. This is even lower, 55.40 on the week. So on today's expiration and on the weekly, 55.50, 55.40 was an attraction with resistance above it. On the weekly, the absolute GEX is still reigning a little higher. Sorry, I just got a weird message from someone. Absolute Gex is raining at 56, right? So this is an area of interest still, right? I don't think we're on our way down as much. I'm really concerned about what happens at this area, because if it's attracting to this 55, 75 and it holds, we could just pop right back up. Remember, keep in mind, this is tomorrow's 0 DTE will be the weekly. So this will, on Fridays, you do not use these, because on the 0 DTEs on Friday are the weeklies. This is the Friday expiration. Will be Monday, Tuesday, Wednesday, Thursdays. Friday, right? So just keep that in mind when you join Gold. Don't look at these on Friday. Look at these. And by the way, if you're on the fence about joining QTA, use the code DNOW30. It gives you 30% off your first month. Make sure you really like it, and use that month to handle any, questions or issues you might have. Get in there, explore around. If you're into SPX, new in this area, which is new as of this year, is expanding more and more. There's a SPX trade engine, right? It gives you the alerts that we're looking at for spreads. It will give you ideas for an iron condor. It'll let you know when the environment is right for a morning iron fly or an afternoon butterfly. There's a momentum put credit spread. It tells you exactly the price, where to set your stop loss, how long you're going to be in the trade. I mean, it's really cool stuff. And people are really liking it. And this doesn't really need explanation, because it's just letting you know exactly what to do, when to do it. So you can come on and follow along and see how good or how great or how this is working for you, and let us know in chat. But it's still, Brian just put these up, within a couple weeks ago. More and more SPX data is more and more is what people are looking for. That's what I should say. So definitely when you join, get in here, look around in here. Yeah, for sure. Weekly trades on SPX, absolutely. These are more, I think are these more, these are more in line for intraday. If you're into spreads, come down the option spreads channel, and this is where Brian and all the gang, they post what they're looking at, and they use Option Strat. Option Strat is a free tool. It's not part of QTA. You can get the free version, and then you can just join in with the conversation. Brian is very generous with his thought process on what he invests in and why he took a trade. And it's not just, this is a 300% gain, this is 250% gain, look at this 500% gain. He walks you through a plan, and he lets you know. And this is my favorite one. He's probably gonna kick me for doing this, but I'm gonna eat this. I bought the puts back for 20 cents, but they don't want. He lets you know exactly what he's thinking. It's not just, I'm gonna show you my winners, because if you're investing in stocks, we know that you cannot be 100% right all the time. No one is. If they tell you that they're lying. That's it. But he lets you know why he's getting out of a trade, why this didn't work, what he should have looked at. You are learning along with Brian's comments. So if you follow Brian's videos, this is your destination. If you follow the videos and he showed you how he did it and what he did, this is what he's doing and why he's doing it and when he's doing it, right? This is where I know I don't want to speak too much on what Brian does, but I know broken wing butterflies is always a big one, and it's far out. It's not intraday. It's sometimes a month, maybe 2 months, a week, 2 weeks here and there. Whatever the market environment dictates as the best trade is what it is. It's you don't want to go into a trade. I want a 2 week trade. Well, what if you get in there, the move is for 3 weeks, then you have to adjust. So you have a range that you like to trade in. I like to trade 1 or 2 months out. And within there, you get 4, 5, 6 weeks, 3 weeks, and you adjust accordingly. So to sum up, Option Spreads channel is a great place to come. If you're new to spreads, if you're a veteran to spreads, you're going to love it even more, because you can then post what you're looking at and what you think and get people to come back and respond to you. But if you're using the tools, let us know either way. I'm not saying that you just post when you got it all down, figured out. Any questions, post, right? And this is really the basis of Quant Trading app. It's using our technical analysis, right? We're not scrapping it. We're using what we've learned, but we're overlaying data points that we would not normally have access to. So again, with NVIDIA, when we came crashing down, I would have thought this would have been a support right here, 126. But instead, we stopped at 124.50. I mean, this is like this is what, last week? Or is this the beginning of the week? This is 4 days ago, right? Overnight, I would not have looked at that for support. I'll be honest. I may have not have. But the fact that with Quant, it's letting us know before we even have to look for it. Hey, let's look out for 124.50. I look at this chart, I know it. I do not have to do any plotting. I don't have to do anything. It's not that I'm not going to do the plotting. It's just this is more of a fast snapshot. I can look at this, make a judgment call, and be on my way. It's more data points on top of what we already know. So we have the technical analysis. We have this quant chart to give us the levels. And then we overlay the GEX to give us the sentiment. And let's just finish this up here with NVIDIA. And we'll go in, we'll check tomorrow, and we'll check next week. And what was our idea? That 120? 120 for the bottom, and then 130 is still probably going to be the high one. And now it changes the data, right? So we're only using these two expirations. It's got new data. It compiles it together and gives us this. 130, still strong. 120, perfect. Now this is where we can toggle more specific data, right? We can have that absolute GEX I mentioned. We can see how these are values measured in spikes, just like call volumes and open interest. We have right now, the highest one is 125, right in the middle of where we were. And look at the bookends, 120, 130, almost equal. This showing us that people are a little indecisive on which way to trade NVIDIA, almost like they're waiting for an event, right? And they are, because next Wednesday, are the earnings. Thanks, Doc. It was a nice presentation. I have to leave now. Hope you will post recording. All right, Newen, thanks for coming. Thanks for stopping by. I'll let you know when we get the recording out. So what we can do now is we're going to shut the absolute GEX off, and we're going to look at some of these other values. Call open interest at 130. Makes a lot of sense, right? 130 was the one we were talking about. 130 is the highest call open interest. How about call volume? Is it going to be 130? It is. 130. Still hanging in there tough. The highest one. Now if we switch it, and we're going to look at the put side, the put open interest, any takers for 120? 120 it is. What about the put volume? Now the put open interest acts more of a magnet, right? It's more of a magnet because that's where the open interest is. This is where the liquidity is. That's where the market wants to go. 120 is a strong magnet. The put volume, if that's also at 120, that would be a magnet and the support. If the put volume is a little lower than 120, all that does is draw it to the open interest with the support lower. If the support would be higher, like if we hit the put volume right now and the put volume's at 124, we have an issue because 124 will be blocking us to getting to this open interest. All right, so let's stop talking, Doc, and let's just put it on. Okay, this is the one scenario I didn't think about covering is that the put volume would be at 125. We are now below the put volume spike. That will act as a resistance in my trade theory, right? The way I like to use GEX. So it was 125 right here. Makes a lot of sense. And we'll just mark it off exactly at 125 so we can get a better look at the price action. 3 cents off. Boom. Boom. Right? And 125 again lines up with our midpoint, 50 cents off from it. But you see how everything is coming confluent now. Everything is making sense when you start overlaying the data. It's like, oh, of course, 120 Yeah, that makes sense. A put volume and a put open interest lines up with our data that we had earlier on the technical chart, lines up with our data we had on the quant chart. Everything's starting to click. Everything's coming into place, and now I can see a little clearer rather than just fuzzy open waters. I now have a direction using a GPS, a navigational tool, right? So what does this tell us? Let's should I sum this up? Sorry. So what are we saying is we're below here. This now just makes the case more for 120. Now overnight, things get a little fuzzy because there's no options. There's a lot less volume, that's for sure. So things tend to move a little more free, a little easier. And if you have something that if the price action would come back up, the market will tend to correct it or decide whether to correct it or not the next day. If we close below this line, there's a good chance we hit 120 through the day. If we close hard below this line, we may hit 120 overnight, find support, and then open anywhere in between here. So there's a lot of things you have to take into consideration. Yeah, 120 might be visited, but what if it's visited overnight and we bounce off and then we open right where we closed again? Those options that we held overnight are worthless. That's why you call them lottos, right? They're money I'm okay with losing because tomorrow is the expiration of that option. It's just not something that we can hold on to. If we went 3 weeks out, we would be okay. We'd have room to play with. We wouldn't lose. It wouldn't go from 56 cents to 2 cents. It would probably go from like 475 to 380 or something, you know? Don't quote me on these calculations. I'm very, very bad at math. But that's the thinking, and this is how you, or at least I apply it to my investing. And I'm getting more into swing trading, so I'm not posting such intense intraday moves. You know, I used to post, okay, we're paving the road to 120. Let's look at it, and then we get into it, and we'll hold down to 125. It's just a little too on the nose and exhausting. But I'm going to get back to it. I'm saying I'm getting away from. I'm not getting into it. I love it too much. I really do. But that's really the long and short of it. Hey, Monica's in the house. How you doing, Monica? But this is the way it is. This is the way I use QTA. And if you're still thinking of it, right? If you still want to, if you can't decide whether this is for you or not, just if you go to the server guide, right? You click on this link. You use code DNOW30. It will give you 30% off your first month. And then the first spot you go to, you come right here to getting started. And it's a prepared checklist, really. It's an itinerary. And it will walk you through the exact steps you need to take to get comfortable using QTA. When I first started, this was April of last year, I spent the weekend poring over data. I did back testing of everything I could because back testing is available. Almost everything. I'd say 98% of everything is archived, sometimes back to 2020. You can then backtest whatever if you had a play last week that you just didn't understand how it went away from you. How did they get away from you? How did that not happen? Why did I not see that level? Go backtest it. Spend the time. Spend the first 24, 48 hours backtesting things. But here you go. After you join, you hit the DNOW30 in the checkout. You're in. Gold side will pop up. You get access to the website. All these website tools will be available to you in addition to the Discord tools. So you'll have 2 areas to access. And when you go down this checklist, you see it right here. Install the scripts. How do you do them? There's videos along the way. There's instructions. There's slides. There's frame-by-frame instructions. You follow this down, and when you're done, then you can start accessing all the other ones. This is Advanced Gex, what we were talking about earlier, and this is where you find the quant charts that I have up over there. These are the quant charts. The quant charts are on the website, as well as the Advanced Gex, and in the Gamma Exposure and the SPX Trade Engine are on the Discord side. Again, you get access to both when you join. Well, thank you, Monica. It's good to see you again. And that is really the long and short of it. That's the calls and the puts. But absolutely. And when you do join, let me know. Right? I'll make sure that you're in the right spot. You're pointed in the right direction. If you need assistance in how to work things, come on down to Quant Chat. Come on down to Quant Chat. You go to Quant Chat here. Quant Chat is basically everything we've talked about today, which is the GEX snapshots. Here's Bryant posting another video on SPX. Is New One still here? I think New One bounced. This is where people will post the quant charts and the GEX tables. This is the option volume chart, which we won't get into this section. This is for more advanced intraday trading. More levels to get in and out of. But this is where you want to spend your time getting used to it. Share what your questions you have. Take screenshots. Post them up. Gold Chat is more of a generalized stock investment channel. BK Brown is a powerhouse in here. She has a system which she shares so generously. And you can ask her about her systems. It's based on the PDVR, the previous day's volume ranges and call blocks like we talked about. Solus is my man. Known him for a long time. This is where we have more general stock talk and more different charts. With Quant Chat, just what we talked about. Then with spreads, just right down the line to option spreads. Right? Makes sense. The idea of QTA is to add confluence to what we've learned. Right? I went to all the seminars. I went to the courses in Manhattan. Bryant went to these courses. And we all went to these courses. We all learned it one way. We learned it by technical analysis. We learned it by trying to find patterns. We learned it to trying to find trends and levels. We still have that information, but now we get to have added data onto it. If you're just learning stocks now and just getting into it, you've come at a much easier time. There's no time before this year that has had more data available to the independent trader than there is right now. For years, for decades, there's been tools that have only been available to the professionals, to the people trading gobs and gobs of money. And they just were not available. Even if you could get a Bloomberg terminal if you were a millionaire and you could throw that kind of money out to just have access to it at your home. But it didn't make economical sense. Now, these systems, quantitative theory, quantitative method, gamma exposure, SPX trade engines, these are all now available with a quant trading app subscription, right? So do yourself a favor, take this next month, and it starts the day your full month starts the day you sign up. So we sign up today, you'll have a full month from today. It doesn't restart on the 1st. You'll have a full 30 days to go through everything. And that's the only way to really get into it is you got to get your hands on it, right? You got to test drive the Ferrari to know you love it, right? Or you could say, no, I'm pretty confident I'm going to like this Ferrari. I'll just purchase it. Thank you very much. But take a test drive. It's 30%. What is that? $140 for a month. $140 for a month to get access to all these tools. And try to make sure that you actually know how to use them. And you have a community backing you. You have videos. Brian must have put out like 7 videos in the past 7 days. He's just been cranking out these, and his videos are no joke. His videos are broken down by chapter. You see the insight. You see the reasoning. You see what his outcomes are. You see his thought process. He's so generous with what he's doing. And you have a community backing you with everyone else's ideas and help. The tools are there for you to use. Monica, you watched all of Brian's videos in the past 2 weeks. Awesome. Amazing, right? Now you just learned from me. Oh, that's awesome. Monica, I really hope to see you on the gold side. You are an asset. You are a pleasure to have around. But do yourself a favor. Take 30 days. Take it for a test drive. I'm telling you, if you spend a day or two going over and get recognized with the levels, and they're easy to really understand. The GEX levels are they're just like what we talked about, right? You have an attraction, and you have support, and you have destinations and targets, right? Attraction, absolute GEX, 227.50, high GEX, in between two call volume spikes. Let's see how that plays out. And we'll follow the spot price. We're going away from that because of the call volume spikes. It's still the highest, still the highest. We're going away. We're getting up to the call volume. That call volume spike turned to be resistance. And now we're going away from the 227 and toward, let's back up and see where we're going toward the max pain down here. And this is how you learn the price action by using GEX. You just shift through the feed and see where we're going. Now we have this amazing right here. I love when this happens. You have a net negative environment with the net GEX high negative spike coupled with an absolute value of 210. We were at 227 right below that spike. That acted as resistance, and we traveled down here. 210 is a very attracting level to me right now on Tesla. And that's it. About the put peak acting as support. That's cold volume peak turning very clear. Monica, you are free to come to every one of my sessions. You are very good with praise, and I like it. I like it a lot. But yeah, really, guys, that's really it. You know, it's tools. You know, learn how to use them and be your own independent trader. You know, you don't have to subscribe to services that give you an alert that happened 5 minutes ago, and by the time you get to your computer, you know, it's all gone. I'm not even going to entertain other systems. This is how do you learn to trade for yourself and how you can find the freedom in not spending all morning from 4 a.m. before to the bell finding levels and quantitative trade plans. Just do it yourself. All right, guys. Well, if you have any other questions, you can find me in the public area. If you wanted to, you know, using QTA, you require a working knowledge of options. If you believe that you're lacking in that area, or just any type of charting or any type of, you know, system, contact me, doc@101stocks.com, or find me in the public area. And we can work out some sessions, get you into some classes, and get you the tools and the know-how to become your own investor. Right? There's so many people I speak to, and they're like, "Oh yeah, his name is James, and I speak to him like once a year, and he handles my money." I was like, "Really? He doesn't know your goals. He doesn't know what you want and how much money you want to have tied up, and how much you want to have in liquidity, and what your assets." This is a chance for you to start taking control of it, and it feels good. It does feel good to be able to know how your money is being invested and that you are doing it. There's a satisfaction in it. You know, obviously the goal here is to make money. When I'm saying our goal is not to make money, it is to make money. But it's important to know that we are protecting our capital first and foremost. And this is the way to do it. So take the code DNOW30. You just find access here, server guide. Or you can go to quanttradingapp.com. Same thing. Click on the link. Use the code DNOW30. Once you get checked in, you have access to the gold side, and you go right through that getting started section. Any questions along the way, there's a full support channel. You can reach out to the community, reach out to me if you're still not finding the answers, and we'll get you squared away. Guys, thanks a lot. If this is on YouTube, make sure you like, what are they supposed to say? Make sure you like, subscribe, and hit the bell, because I do not do this all the time, but when I do, you'll be there. How about that? Thank you so much, Doc. Have a great day. Thank you, Monica, and thank you guys for joining us live in the public chat, public voice session. This is a workshop we do once or twice a week, and we're going to have rotating topics. Today was going to be focused more a little bit on the NVIDIA earnings coming up. Next week is probably going to be about NVIDIA earnings on the Tuesday, and then after that, we're going to have rotating topics. So any topics, submit them in the comment section below or submit them in the public chat, and we'll see what the next one is. Thank you guys so much, and I'll see you guys next time.